A little bit of good news, bad news. Bad news, we are slightly off schedule. Good news, it wasn't my fault, it was Douglas's. Bad news, no one else wants a job. Good news, he loves it. A little bit of bad news in terms of a lot of process and a lot of overdue change that's needed. Great news, change is happening. And I think patience, I've heard it's a virtue, but it's actually the most, I think, annoying, challenging aspect of public policy. And when you're an innovator, when you're an entrepreneur, you don't always have that patience. You are driving to solve for those challenges and problems that you see. Welcome, everyone. Come in, find space. Now, there's an unfortunate reality, not just about the size limitations of this room, but also about the economic status of our country. Financial inequality persists, and the divide is widening. A large contributing factor of this is the lack of unequal access to wealth-building tools. And up next, we're going to navigate how to minimize credit barriers for Canadians and knock down the barriers that prevent smaller businesses from driving this much-needed innovation in the financial sector. To discuss further, please welcome my friends and yours, Independent Senator from Nova Scotia, the Honourable Colin Deacon. Founder and CEO of Coho, Daniel Aberhart. Get on up here. CEO of Equifax, Sue Hutchison. Founder and CEO of Manzil, Mohammed Sawaf. And co-founder and CEO of Borrowell, Andrew Graham. Let's see who winds up on the left seat.
It's on, isn't it? Yeah. Thanks everybody for being here. This is a topic that's really important to me. We're going to dive right in, but our credit score system doesn't work for a whole lot of Canadians. And we did a study last year with African Canadian entrepreneurs, and we found out that black entrepreneurs in this country, for the most part, are financing their businesses out of savings and credit cards. That is a business set to fail from the beginning. We know that. Those are not conditions for success. A lot of people cannot get loans, and they cannot get access to credit to make their lives better. So this is a really important public policy issue, and I am so honored to be here with these folks to talk about it. So I'm going to start by just having each person, just for a second, 2.5 minutes most, talk about your business and what the core value is that you're delivering. And then we're going to go on to a few other questions. I want to ask them about a specific story that has driven them and caused them to really want to see change in this system. And then what are the barriers that are preventing them from really excelling? And what do we need to put in place to make that happen so that we really have something quite different? So in the next 33 minutes, that's what we're aiming to do. And I'm really glad they're here, and I'm glad we're here. Andrew, I'm going to start with you.
Terrific. Senator, thank you so much for putting this panel together and doing everything you do. You're one of the most thoughtful and important advocates that the innovation sector has in Ottawa. So thank you so much for what you do.
Thank you. Thank you.
So I'm co-founder and CEO of Borrowell. We are one of Canada's largest fintech companies. About almost 2.5 million Canadians have checked their credit score for free with us. We were the first company in the Canadian market to offer credit scores for free. We did that in partnership with Sue and her team at Equifax. And they've been great partners for us and continue to be to this day. We really want a world where people don't worry as much about their money, where they feel more comfortable with the path that they have in front of them, especially around credit. And that's why we think that offering ways to learn about your credit and ways to improve your credit are so important. And the senator asked us each to give a story of a real customer who has benefited from our products or has faced these kinds of barriers. Well, we recently launched a new product called Rent Advantage, and we did that in partnership with Sue and her team. And what that does is it allows people who rent to report those rent payments to Equifax, okay, and get credit for that. Because if you pay your mortgage every month, that's been reported. You get you get credit for that. That becomes part of your credit history. But as a renter, traditionally, you have not been able to do that. And that just, that just isn't, doesn't seem like a fair approach. And so we launched a product called Rent Advantage, which I hope many of you will try out if you're a renter. And we received a ton of media interest around this. And I was doing a radio interview, and for anyone who's done a radio interview, you know that before you go on, you typically talk to a producer. And I was chatting with the producer, and he was sort of saying there's 3 minutes to go. And then he said, you know what, I'm not really supposed to say this, but I think this is such an important product. He said, my wife and I have been renting for like 15 years. We've always been renters. And I've just never understood why that doesn't, why don't get credit for that? Why lenders can't see that? I want to buy a home eventually, and I want people to know that I've never missed a rent payment in the last 15 years. So that really stuck out to me as just an example. Anyone who rents really gets this, the importance of this new product, and we've had so many great stories and conversations like that.
Thanks, Andrew. It's such a fantastic story about financial innovation really opening up and solving a very real problem for a lot of Canadians. I first heard Mohammed speak on a BetaKit podcast, and I was blown away about the courage of this single Canadian who took on the challenge of coordinating religious rules and beliefs around regulatory rules and foolishness. Sorry, I didn't mean it that way. and the legal challenges, where other countries are doing this on behalf of their population. You took this on as a challenge individually. Mohammed, please.
Thank you very much, Senator. For those that don't know me, I'm Mohammed Sawaf, founder and CEO of Menzel. And currently we represent the 2 million Canadian Muslims that are underbanked, unbanked, and if not, actually don't have any credit scores within the country. There's a main tenet within Islam that you can't pay or receive interest. That doesn't mean that these transactions can't be profitable, but they cannot involve usury. And so when you're living your whole life debt-free, you do not have a credit file. And what we want to do here at Menzel is actually fulfill that gap. So we actually manufacture these products, we distribute them on a D2C or even B2B2C basis. We have partnerships with Coho as well as Equifax on that front. And we are representing many Canadians that have been renting for decades. And the best example I can give you was my brother-in-law and my sister-in-law wanted to buy a house. And of course, number one, they wanted it to adhere to their religious values. But secondly, they didn't have a credit file in order for lenders to approve them. And so they approached my father-in-law for an interest-free loan, which he gladly gave to them, which I'm yet to wait for myself because I believe in equality, but that hasn't happened yet. And so when I looked at that deal, I said, you know what, my brother and sister-in-law won that deal 100%. You got an interest-free loan. And then my father-in-law did obviously the favor for his daughter. And I said, there has to be some way to make this work so that both sides win. And so by creating Menzel, we introduced obviously a mechanism that not only allows Canadian Muslims to invest their wealth on a Sharia compliant basis, that allows them to participate in profit sharing transactions, but it also helps put Muslims into home ownership, which we have 50% less than the average Canadian. And that's not because of their balance sheets, right? There are many doctors and professionals that are renting today, and they tell me that they will not participate in a conventional banking transaction because they want to adhere to their faith, yet they need the space. And we've seen how the housing market has been increasing rapidly, and they're not participating in home ownership, they're not participating in the economic growth, they're not participating in creating intergenerational wealth. And this is part of the Canadian dream. So we're helping fulfill that and happy to share more of that throughout this session. Thank you, Senator.
Mohammed, thanks very much. And what a great example. The first two examples are showing you that when we open up our systems to innovation, when we open up regulation to innovation, the opportunity that is created is just incalculable. Sue, you've been at the center of a lot of this, and as somebody who's leading a big incumbent organization, that there's not a lot of transparency in terms of how those scores are delayed, even myself, I don't understand why my credit score goes up or down 40 points in a
The
month.
Wizard of Oz behind the curtain.
But I really admire the courage you've shown in taking on some of these new innovations, and just please, over to you.
Great. Thanks, Senator. This is such a great conversation that I'm super passionate about. So I'm about almost 2 years into my role as CEO of Equifax Canada. Equifax Canada is the largest credit bureau in Canada, so we are definitely part of the problem. We've been around for 100 years, 120 years, and what we do is we provide data and analytics and credit scoring to the lenders in Canada for them to make their decisions on whether to grant mortgages, small business loans, credit cards, etc. And I would say that a lot of the scoring we've been doing for years has served many segments of the population very well and will continue to. However, demographics are changing. More people are renting than they have 10 years ago. And as Andrew articulated very well, if you pay $3,000 rent for 10 or 20 years versus a mortgage, those rent payments don't go into your score. And so we're really looking at alternative data, alternative to what was traditionally in scoring models. Young people are not buying autos like they used to. They're ride sharing, right? So there aren't auto loans that are creating what we call a credit score or a file or even a thick file. And so what we're doing at Equifax is we're looking at bringing in alternative data, great partnership with Borrowell and Coho in terms of bringing in different kinds of information that's absolutely available. So it's highly illogical that we're not looking at these things where people pay their mobile phone bill, their utilities bill, they pay for rent, and it fully demonstrates capacity to pay, but we haven't been including it in our models. So really some great examples of some fantastic partnerships. And what we're seeing, because the big thing for lenders is they don't want to take on more risk, right? So that's the important kind of variable. So we've had some great modeling to show that if you include alternative data and you grant loans, risk does not go up. It's the same or less. So that's the proof in the pudding that we can actually do this if we work together.
Sue, thanks so much. And it reminded, a year ago, no, sorry, more than that, time flies. 2 years ago, I read a Philly Fed report on, and what they identified was that when you use alternative data and analyze it using new alternative methods, you find invisible prime borrowers within the uncreditworthy population. And it's great to see an incumbent organization fighting to find those same invisible prime borrowers.
Yeah, and it's a great point, Senator. In the U.S., we participate in an exchange that has sort of only alternative data, telecom, utilities, rental, and it absolutely proves that, there's capacity to pay and there's history there, and we can actually lend to a much bigger population and help them with respect to, new immigrants coming, settle in more quickly. Because what does a new Canadian probably gets a phone, a mobile phone, and then tries to rent. But guess what? You can't rent without a credit score. Yeah. Right? So the other thing we're doing is looking at, why can't we provide to lenders the credit scoring data from India, from the US, from the UK. So I'm working with my partners at Equifax to figure out how can we do that with consent, obviously, because again, the data is there. We just have to think of this more logically, I think.
Fantastic. Danielle, you and I first corresponded, I think, by email. I saw you present at CIX a number of years ago. First time I started to really understand prepaid credit cards and the business you're in. We had a good conversation about what you could do, what you want to do with help Indigenous communities and a whole lot of non-traditional communities that are not being well served. Over to you about Coho.
Yeah, thank you so much for having me, Senator Deacon. So I'm the CEO and founder of a company called Coho. What we do, folks, is we give kind of core spending and saving services to about 500,000 Canadians. In the last probably 18 months, we've really got into the credit space, and it's really kind of come onto our radar. The way that I would, and I'll oversimplify a bit, but the broad contours of this are such that if you have a 700 credit score, the world is largely open to you. The rates that you'll get will be prime, the mortgages that you'll get will be prime. And if you have a 600 credit score, the world is very different in terms of your cost to borrow, and then ultimately that compounds into like your ability to have financial stability. And so the difference is, if you look at the loss rates between a 600 and a 700 credit score, if you lend $1,000 to a 700 credit score, you will lose $2.50. And if you lend $1,000 to a 600 credit score, you'll lose $4. Like, that is an incredibly narrow band through which to route completely different financial outcomes. And so, you know, what that was kind of a very inspiring and exciting moment for us at Coho. And so we're doing two things today. One of them is a short-term borrowing product called Cover. And what we do is, instead of looking at credit score, everybody at Coho can get this. It's completely unsecured. We look at your cash flow. We look at your history of income, your history of earning with Coho. And what we see is the folks who are on the bottom quartile of that credit score end up performing about 100 credit score FICO points better. If you're in the middle, we're getting kind of 30 or 40 FICO points of improvement. So just by looking at sort of alternative sources that we have, we're able to lend to folks who otherwise wouldn't. And then the challenge with that is that is a very difficult model to scale, because if we want to go and raise $100 million to do this, we have to innovate on lending and then scale and be able to sell this credit adjudication model, which comes back to the wonderful work that Sue's doing. So, you know, in terms of the specific ask around the story, I would just kind of encourage folks to, we talk about these numbers in aggregate, but what real financial equality means is like self-actualization. It means going back to school. It means not having to work a second job. It means putting your kids through school. It means real things for these folks. And so that's why I think the work that these folks are doing is so important.
What I've always loved in conversations with you and watching how you relate to these issues is that you really do understand how those who can afford the least pay the most for financial services. And you once said, and I heard again in our prep call, you talked about the entry point for most people into the credit score system is one of the most expensive vehicles out there. Just speak to that for 1 second if you could.
Yeah, if you look at the traditional playbook here, it's go get a credit card and get an auto loan and maybe get a mortgage. And, you know, mortgages are largely out of reach for huge percentages of this population. If you go and get a credit card, that's 18 to 20% unsecured debt, which is some of the most expensive debt that you can buy. And this is like the feeder funnel that we put these folks into. When we're not looking at, as Sue is alluding to, cell phone payments, rent payments, history of income, all these things which I would argue are much more behaviorally indicative of your propensity to repay, and much more representative of like the diversity of Canadian life that we see with folks like that Manzel are doing. So really excited about the progress that is being made here, but an incredible amount of work to do.
Thanks so much. Andrew, if you could dive into, when I read about Rent Advantage, I was just so excited. I thought this shows what's not been there and why we need financial innovation. But when I reached out to you about it and asked, so how's this working out behind the scenes, despite all the support you've got through Equifax and Sue's leadership, the side of getting the data to do this job, I gather, remains because of the 18-month timeline that we're at plus that we're on to get the new regulations in place for open banking. You've got a lot of challenges around that. Can you speak to that for a bit?
Sure. So with Rent Advantage, the goal is to help people prove to Equifax that they've paid rent. And of course, data integrity matters a lot. We can't only take the consumer's word for it. We need to be able to show proof, and that makes, of course, a ton of sense. And there's sort of two ways to get that proof. You can have the landlord verify it, but that's really problematic. A lot of people don't have great relationships with their landlords, or maybe their landlords are, you know, a mom and pop, and they don't really, you know, want the extra hassle of having to do that. So there's lots of reasons why that's challenging. So the way we're doing it, and this is again a first in this market, is the consumer, when they sign up, they link their bank account and essentially show us the rent transaction. So they say, look, I told you I pay $1,000 a month in rent. You can see my rent transaction every month coming out. Okay, so that way there's very solid proof. The problem is linking to bank accounts and pulling those kinds of transactions is very hard in Canada. Even though, you know, we're 10, 20 years into this, as Sue said in the last panel, because we don't have open banking, this is not an easy process. And some institutions, some banks, some other companies make it very, very hard to make that data accessible. And I know, like I'm sure many other people on this panel, I just think that's just not right. I mean, if you're paying rent every month and you want Borrowell to report that to Equifax, and that's a transaction you want to happen, surely you should be allowed to do that, right? Your bank should have to let you do that. And so that's what open banking is about, and that's why we think it's so important, because it lets a consumer get credit, in this case, for paying rent on time every month.
How often do the screen scraping links break?
Yeah, I mean, it's a complex area. It really varies by institution. I won't name names, but some institutions make this actually very hard, and the links
Almost daily.
Almost daily.
Name them.
That's something we should talk about, Vas. But, so it's a real challenge.
Yeah, real challenge to deliver the value to people who need it most. I was amazed when we had a chat and I started to hear your story. I phoned up Mohammed after I listened to the Beta Kid interview, and I said, we've got to talk. I want to hear this story. But I alluded to it earlier. You really did a lot of back and forth over several years to try and create this circumstance. And we need a regulatory environment, but we need a regulatory environment that's nimble and agile and can adapt to different non-traditional approaches, and to approaches we really need to embrace. But could you just tell a bit of that story about those barriers that you've faced and what you're facing moving forward?
Yeah, no, thank you, Senator. And so, previous to Menzel launching 2020, we were actually in R&D mode for about 3 years with a legal team, accounting, consulting team, and then, of course, an Islamic, religious team or a Sharia supervisory team. And when we sat at the table, it was, of course, outside of the box thinking. And there was this constant back and forth of our legal team and tax team saying, hey, what you guys are asking for is kind of illegal. And then the Sharia team would be like, well, what they're asking for is kind of impermissible. So how do we kind of, fit this round peg in a square box, and make this happen? And, when we found a solution that we were happy with and ready to launch with, of course, we were navigating the regulatory, legal, and tax environments with all of this to ensure that we created a product that was competitive for our community, right? And our community still is put at a disadvantage, especially amongst all the tax rules, right? So I'll give you an example. When you're looking into any type of transaction, especially in a country or where there are tax rules, most of the Islamic world is on a tax-free basis. It's great because they have all this oil wealth, so they don't have to charge tax, and you can, have back-to-back sale transactions and nothing happens. But in a jurisdiction like Canada, for example, if you were to enter into a purchase and sale agreement for a property, and let's just put that number at 500,000, there's land transfer tax for Ontario, and then if you bought in Toronto, it's double that. Now, as a bank or as a financial institution, we actually have to participate in acquiring that and then sell it back to the individual to ensure that it's an asset-backed or asset-based transaction to overcome the rules of usury. But then what happens is, technically we would pay land transfer tax on that property, and then once we resell it for, let's say, $750,000 because there's an embedded profit rate over a certain period of time, well, now the end user has to pay land transfer tax on the higher value, and then potentially we're now involved with a capital gains tax because we've sold for higher than what we bought at. And so these were some of the main tax issues that we had to overcome by introducing special purpose vehicles and, of course, structuring the product in a certain way to accommodate that. But then what we found in practice is, well, now our community has a disadvantage on the first-time home buyers rebates as well as the land transfer tax rebates at the municipal level, right? And that's something that we're working towards in order to overcome. And so I had recently wrote an op-ed around this to say, well, if we really are thinking about diversity and inclusion and actually looking at a community that is financially excluding themselves, meaning they are on purpose not participating in a system because it doesn't abide by their religious values, well, we need to actually look into some of these situations to level the playing field. We're not asking for anything more than everyone else is getting. We're asking for the same. And so these are just some of the things that we're tackling today. We've been in many conversations with regulatory bodies because they've come and they've wanted to understand, the uniqueness of our products and better understand how that's working within the system. So there's been a large education and awareness process that's happened there. And we're happy to continually work on that basis to ensure that potentially down the road, there is a regulatory framework that can be put into place similar to the UK, the US, and Australia.
Those governments led this challenge.
That's correct, yes. Yeah.
Yeah.
We're upfronting that cost right now.
My admiration for you is incredible because it is. I just didn't. I'm always amazed in this job about what I didn't. I don't know. I didn't know. It gets bigger and bigger every single hour, and I learned a ton. Learning about your business,
Thank you.
And it's why I love startup entrepreneurs. I was a startup entrepreneur for most of my career, and the tenacity that it takes, the belief in a vision and the tenacity it takes to build these businesses is incredible. And I really wish our policymakers understood that a little bit better in terms of the courage and everything on the line when you're doing this sort of thing. So again, I admire, and you work in an incumbent organization, an incumbent system, and you're trying to...
Incumbent, also known as old legacy, yeah, part of the problem.
And,
yeah.
Well, no, but you're trying to find a way through that. And in threading the needle, what are some of... Just give us a sense of some of the things, to the extent that you're willing, that make it hard for you to do what you know needs to be done.
Yeah, listen, it's not just hard for us, it's hard for Mohammed, it's hard for Andrew, it's hard for many, either trying to borrow or trying to change the system. There's a ton of inertia, right? So the big lenders like to change a risk policy. This is like a year's worth of work. Approval from the bank regulator, OSFI, like a ton of production and technology change and a change in adjudication process, et cetera. So the natural inertia around this is gargantuan. So trying to change it, I had a really interesting conversation with the head of one of the big banks here who said, we need to tackle this, Sue. Indigenous communities, Black communities, new immigrants, we're going to have 2 million in the next 5 years, almost sort of a catch up from the lower numbers in the COVID years. If we don't solve this, the fintechs will. And I was like, awesome, okay. So we kick off this project, we're going to get bank data, we're going to get all this stuff, we're going to test the models. And as that conversation left he and I and got into the bowels of the organization, I mean, oh my God, we can't give bank transaction data, even if the consumer wants to give it. So we're banging away at it, but I think, the innovation will spur on the big lenders to get their crap together and say, this data is available, we have the technology, Equifax is willing to work on this. We're modeling, bringing in rental data. Unfortunately, I can't just go to one landlord in Canada and say, love to have your data, right? There's a bajillion landlords. Some are bigger, more chunky, but even social housing, working with the government, we'd love to get those payments in because those are the folks often that are in this kind of debt cycle and paycheck to paycheck, but they're making rent payments of, $1,000, $1,500, sometimes $2,000 a month. Love to have that data. So I think if we can prove the model and talk about it more and show results for parts of the community that have been disadvantaged. CMHC issued out a report recently on home ownership by race. I gave them tons of credit for making bold statements. It's not just about can you get a credit card or an auto loan or a mortgage. It's about generational wealth, right? So this report talked about not just which segments of the population own more homes, but the wealth generation that passes on from home ownership in Canada, which is a big deal, right? So these are very important decisions that lenders, large and small, are making every day. So I think innovation is hard, and I think we have to just chip away at it and show some of the success stories of how we help consumers and small business, because small businesses are also disadvantaged by race, by ethnicity, as newcomers, et cetera. So it's a similar issue as we look at the huge small business community in Canada.
Yeah, exactly, and the effects on small business. I've got to know several African Nova Scotian entrepreneurs, and one just earlier this year, missed out on getting a loan to make an acquisition because he thought his credit score was fine. It turned out it wasn't because of a $30 bill that all of a sudden was assigned between when he applied for the loan and it was first checked to when he was about to be issued the loan. The last day, 5 months of negotiations and work with the bank, and that's gone. He was devastated. It absolutely, because it ruined his credibility with the business he was acquiring. It just devastated this young, courageous entrepreneur in a community that needs success, the success he's been generating.
Yeah, and part of that issue, Senator, is that many lenders look at small business owners as consumers, and they assess them on that consumer basis, and they might have to take title on their house, their family home, etc. There's some great new models where they're looking at small business owners as the business, the history of the founders, right? And not looking at the consumer side of it. Whether it's good or bad, they should be assessed as people that have run businesses for multiple years. Our commercial bureau in Equifax is really growing. We're putting a ton of attention in there because it's super important to the Canadian economy. But that's a big issue that is slowly starting to change, we hope.
Daniel, I wouldn't mind you just talking a little bit about the barriers, and then I'm going to get you to switch to our final question as we move back down the line in our final 5 minutes. Just in terms of the barriers you've been facing and how it disrupts your ability to deliver this unique value. And then after that, talk about a better world that you see and what we need to have in place, other than Abraham getting done and it all being magically implemented the next day. Let's be very specific.
Yeah. So look, when it comes to, if you think about the act of lending, which is the function of buying and selling money. And so if you are going to innovate in lending, a few things have to happen. One, you have to come up with a more efficient way to get folks capital, right? And so what that means is you're looking at alternate data sets, new data sets, whatever those things happen to be. You then have to scale that to a point where you can actually materially impact tens, hundreds of thousands of Canadians, right? But then the real kind of challenge with this is that when I go out and say that I need $50 million for this lending book, they're going to look at this and say, okay, well, what's the FICO of these folks? And they're going to look at very traditional metrics. And then if you're not doing traditional lending, then they're going to say, we're not going to lend you this money for 3%. We're going to lend you this money for 7%. So then when you're lending, what actually happens is you have to not only find better ways to lend, but you have to find better ways to lend where your cost of capital is maybe 2x. So the margin with which you have to win becomes very material, right? And so that's a big part of the challenges that we face. To make it more concrete in terms of the solutions, I think there's a few things. I am very excited about Sue because I've been waiting for a Sue in Canada for a very long time. It really does start with the credit bureaus and the FICO and the interest in alternative data scores. Because Sue, from a market perspective, has no real incentive to do this because the banks are very happy with the existing lending models. They're very happy with the existing returns, and they have no real upside. So when we say Sue, we want to go look at proof of income as a way to lend money, and what does that mean for a data set? We consume that data, we look at lending behavior, and then she has to sell that, and then the banks have to sell that internally, and then the banks have to ultimately sell that to OSFI with a tier 1 risk capital ratio and a bunch of stuff that's quite mechanical. So it is a long tail, and it really does take advocates like Sue. But then the other thing that it takes is, I think fintechs really struggle with ambiguous, I would much rather bad regulation than I would ambiguous regulation around these things. And so we can navigate bad regulation because we know what the boundary conditions are, but investing a bunch of stuff and time and energy in areas that we may not have clarity on in 18 months is a really hard thing to do.
That was Mohammed's life.
Yeah. It's the way you've been living for, So these kind of things, not just here, but open banking, these dimensions really matter and waterfall through to these things in real concrete ways.
Sue, one or two things that you really like to see in place that'll make life easier for you to keep moving faster and faster down this path?
I mean, I think we serve the entire ecosystem: government, big banks, little banks, small business, fintechs, like all parts of the ecosystem. So what I'm looking for, and I found in Andrew and Daniel, are great examples of how we look at this differently, right? So my job is really to amplify those partners we're working with and the real concrete solutions and the difference they're making, and tell that story to the regulators, to the big lenders, and kind of, certainly for the big lenders, sort of prod them into action on this. Because getting scale, it's hard to get $100 million in capital, but it's not if you're Royal Bank of Canada, right? So like, to get scale and to make a real difference, we need some of the big lenders to get on board here. So I feel like my personal mission is not only to we have a new chief data officer who's a complete rock star. We're doing awesome stuff. A lot of the rental stuff is in her bailiwick, but continue to hire talent that looks at this differently, and then continue to amplify all of these great innovations and fintechs that are doing great work to really prod us to kind of move along and get better results on this.
Thanks, Sue. I did notice that Douglas went 2 minutes over. We might go 2 minutes over, but let's, as quick as we can, get to what's the better world look like for Manzill as you move forward? Because you've got a big opportunity you've created.
Yeah, no, absolutely. I think I'm going to echo what Daniel and Sue had mentioned. Number one, access to good cost of capital.
Yeah.
Because we are a financier, and it's actually very interesting to see that we are underwriting according to the bank's risk criteria, but they still want to charge us more, right? And so, I tell them, I say, our clientele can literally walk across the street to a bank and they will get a prime mortgage. They will get underwritten, the credit score is great, the income is great, everything's R1 on their credit file. But when they want to come to us, because our cost of capital is higher, right, now we have to add what we like to call a faith-based premium. And I don't like saying that word because I don't want to be looked at as taking advantage of a certain community. And so when you go to these banks and say, listen, we're underwriting just like what you're underwriting, the same risk profile, well, the product's a little bit different. We don't know what that risk looks like. Here's Prime Plus, right? So that's number one. Number two, of course, working with incumbents, and Sue's, moving that charge. My ask to an organization like Equifax is, allowing smaller financiers like us to be able to record transactions that our community is participating in. So they are making monthly mortgage payments, but because we haven't reached that minimum threshold of monthly transactions yet, we're not able to participate in fulfilling a credit file, right? And I know Sue had mentioned that this is something that they're working on, but this is something I think that, if Equifax really wants to support fintechs and startups, they really have to reduce those barriers to entry. All of that along with the legal and regulatory and tax issues.
With everything on Abraham's.
Just throw everything into there, yeah.
Right. Thanks very much. Andrew, if you can bring us home, you've got a great legacy system. You've got 2 million Canadians you're serving, more I think now. What's the big ask, the big win?
Look, I think in this country we need policymakers to recognize that we have an oligopoly running our financial system, and there's some upsides to that, but there's also some real downsides. And as much as stability is really important, as Vasa's great report says, we can walk and chew gum at the same time, right? We can have a system that is stable and also gives consumers and small businesses a lot of choice. And that's the prize. That's the prize, is having a system that's as stable as we've always known, but where there's so much more choice for consumers, where people who are renting can report credit scores, where people who are from different faiths can access the system from different income groups, et cetera. So that's the promise, I think, of innovation in fintech in Canada, is really having those impacts in people's lives. And we've all got to keep pushing for that together. And hopefully, since you're in this room, you're all on board with that as well.
Thank you very much to everybody who's here. Thank you to Douglas, who embraced this idea and fully and helped make sure it happened. And to each of our panelists, I got to tell you, this is why I'm motivated on this issue. Is exactly what we've been talking about. It's what's been driving me. So thank you very much for giving me that fuel. Anyway, thanks everybody.
Thank you.